Welcome to Trading Lounge and the Australian report for the 3rd of December. This is the ASX on the monthly chart here. And this is my best guess at a wave count over the longer term here. Now, the other way that it could be counted here, of course, is that this particular wave 4 here, at this stage we've got a wave 3 here with an A wave here, a B wave here, and a C wave here. Now, it's possible to count this up here in 5 waves, I understand that, but this wave 4 here overlaps wave 1, and at that degree of structure, that's something that's not really acceptable. But either way, even if this was a structure up through here, yes, the market has pulled back to the 61.8% roughly in this space here for that. So there is a case for that. But the takeaway here is that in both cases, whichever way you count it, would still be looking for a move to the upside. So I think there's a long-term cycle to move to the upside here for this, and we're certainly seeing that within BHP as well. So today we'll have a look at BHP as well, because we've been looking at the longer term commodity cycle in terms of copper, and that fits the BHP pattern extremely well. So and the other commodities will run with that as well. Oil is lagging somewhat, but it could also pick up as well. So just drilling in here for this now. I'm just going to go straight to the daily chart in all of this, but it's kind of interesting, I guess, though. If I could just take some liberty here and bring up the US chart here for a moment. Let me find that. It's this one here, but I just want to go to the weekly chart, because with the with this market here, the S&P 500, I'm also looking for 5 waves to move up. So once this wave 1 here completes, that and this pullback occurs, that's pretty much what this one here is going to do as well, as wave 1 and wave 2 pulling back. Now I could put it in the same degree structure as this one here, but it doesn't matter at this particular point in time. I'm still giving all this a bit of thought. But when the US pulls back, then of course we're a bit of a dog on the lead, so we'll pull back here as well. But yeah, that's sort of where it is at this point with that. So I think that ties in quite nicely with that. So I'm just going to go to the daily chart now. We'll pick it up from the low here. So from this low here, we're looking at 1 and 2 and 3 and 4 and going up for wave 5 up here. And I've tied this one in with the US markets, but I'm just still playing with that. It doesn't matter that much. And a 1 and 2 here for that. So this move up through here has taunted me a little bit. This would be in line with the US markets if I had an A and a B and a C here. If I lined it up with the banks, our local banks, then this would be the wave 4 low sitting over in this space here for that. So that's still sort of debatable, this particular one for me, but I've just been going sort of step by step. There's 2 things that we've been looking at here. One is that we can look at wave 1 here and wave 2 here, and we'll just continue to climb at this point, which I think is the case. There's also a case for wave 1 being here, and in that case we would need to see this down here as an A and a B and a C wave here and then push off, and that they're both acceptable in terms of patterns that would occur across a level, because a classic trading levels pattern would be the arrival, the reaction, the first high above the level, and then the A, the B and the C wave here, and the variation on that would be just coming and sitting here and then moving off from that point there. So you know those particular patterns, but I'm just going to show them again anyway. So this is the most common one. We have the arrival, the reaction, the first high above the level, then the corrective pattern, and then finding support. The variation is where it doesn't come back below the level here, this one. So I think that this is probably what we've got here today on the 6,500, which is the medium level here. So the medium level is always halfway between two major levels, so it's halfway between 5,000 and 8,000. So let's take a closer look at all of this. So just going into the 4-hour chart to take a look at the possibility of this particular correction here. We're having wave 1, 2, 3, 4, 5 to wave 1 here. This is one count, and we've got an A wave here, a B wave here, and then a C wave here for this. So what I could say is that if this top is taken out here, you can go long from that point because we'll be going up from that point. But if it fails to take that top out, then we can look for 5 waves coming down here for the Thursday and then pushing up from that point. And if that's the case, if it drops back below the level, then you need to be long here at that point. So we go long above this new high, and if it drops, I'm not that keen on trading against the trend, but intraday traders, makes no difference which way they're going, so I'll leave that to them. But if for the trend traders, if it drops below this 6,500 and then finds support here, that's where you need to be long at that point. Right, let's drill in a little bit further. Sorry, my mind shifted somewhere else. So this is the pattern that we've been working with, and it's possible to count this down as 1, 2, 3, 4, and 5 here for this, and then the A wave, the B wave, and the C wave here for wave B. So green wave A down here, green wave B here, and then we drop from that point. Right, we come down here for wave 1, back for wave 2 here, 3, 4, and 5 here for Thursday, come back up here, develop a classic trading levels pattern on here, and then we can go long on top of this one, and then we'll be on our way at that point. So that's one way to look at it at this point. The other way to look at this is that the move down here is an ABC pattern for the A wave, a B wave here, and a C wave here, finishing here, and then 1 and 2, and 1 and 2 here, as we talked about yesterday, coming into this space. So we thought that it may come up into this box and then down into this box. And what we can do at this, I was talking about going long here, and you can also do all that and all the rest of it, but having a high above that one here, that takes us into the bullish mode at that point. Okay, that's where you can trigger in to go long. So they're the two scenarios, and they're the two strategies. If you wanted to short this because you're an intraday trader, then you'd short it because that's an impulse wave here, then you could short it under this level here for that. And then the target, as soon as you hit the 6,500, just get out here for that. Okay, it'll bounce off that, and it'll go lower, and it'll be choppy. It will just it will just take your attention, or just burn your attention, your energy up. So yeah, okay, so they're the two scenarios. We'll leave it at that for that. But also what I wanted to do was have a look at BHP. So I'm going to go to ASX BHP. So I think this is going to be the driver, and this is a wake-up call for Australians that this particular count we've got here that I've talked about before has got the possibility to move much higher. So what I'm suggesting is we need proof of count. So to me, that would be getting support on 40 here. In fact, it would be taking that high out of number 1 there, this particular wave 1 here. Okay, so if that's breached here, then this count comes into play. Now I've bought some in here. I'm going to buy some more, and then just continue to add to it, like I've been doing with Bitcoin. So the count for this is 3, 4, 5, an A and a B and a C wave here, 5 waves up here for wave 1. This is very clear ABC back for wave 2. We've also got a very clear 5 waves up here for wave 1 and back for wave 2. Now wave 2 could play out a bit stronger here as well, I grant that. So it could just come back here and then push off from that point. That's why I'm suggesting using the 40 here as a tested support to start building in long trades. But technically above that, let's just go in a bit closer here. Technically above that here, then it's all systems go. You can see that this is clearly an ABC pattern here. And this particular move here, it's a bit tricky to count, but if we go to the daily chart, then I'll just point that out, as I have done before many times. But 1 and 2 and, well, an A wave, a B wave and a C wave for wave 2, 1, 2, 3, 4, 5, the third wave, fourth wave here, and then the fifth wave up here. It's a little bit dodgy, but all the 1s and 2s are in here, and 3 and 4 and 5 here finishing off. I'm a little bit unsure about this ABC, as I've mentioned before, and it hasn't pulled back to the 50-60% retracement level, but I'm okay with that. And one of the reasons that I'm okay with that is because when I look at RIO, that's also doing much the same thing on this daily chart here, you can see it's had a very clear ABC pattern back to the 50% here, and we've also, and just the size of it, you know, compared to this particular structure here, this impulse wave here. So we've been looking at building in long trades here, and you can continue to build in long trades here as well. So just there'll be problems at this high here, so you can add up on top of here, but you could also, you can add again in between here as well. It doesn't really matter because it's bullish. Just a matter of keeping a stop out of the way. Once I understand that this is tested enough, because we may get some other tests coming back here, then we can move the stop up under closer to that point there. But building into this, we're seeing iron ore push up quite nicely here. So there's iron ore here. Wave 3 here, we looked at this as an ABC for wave 4, and just it confirms itself as it moves along here, and it'll find support on 900 and then we'll push up to 1,000 at that point. So all that's going well. Don't need to look at RIO again. We could have a little look at FMG while we're here as well. So it's also had this correction here in line with iron ore, and it's pushing higher slowly. It could get, this could still be a wave 4 over here, that where it just gets an A wave, a B wave and a C wave and gets more complicated. We've got a small position here, we've got a small position here. May have been triggered in, yes, we're triggered in here yesterday, so that's okay. So we've got that point there. So we'll look to build on top of this here again. So yeah, look, that's all looking quite good. This particular move here can be counted impulsively or corrective. But I think the takeaway here is that this move here is in 3 waves, a nice ABC. This move here is corrective. Yes, it could be corrective here and a corrective move here, but it's still all corrective, right? So share traders can hold on into these spaces, into these markets. And you're better off trading shares because the CFDs, you know, you can trade short term with them up until, you know, a few weeks or whatever, but you have to understand when you get some decent sized positions in there, their overnight financing cost compounds every day based on the new higher price each day. So those CFD traders, they're really providers, you know, they're really clipping your ticket. And when you start getting, you know, $50,000, $100,000 into the markets there, you will start paying thousands of dollars a week in overnight interest that will just be, you know, pulled from your account silently, just clipping your ticket. So I know that a lot of folks are unaware of that to a point, but you know, you can have $200,000 position there and paying, you know, $500,000 or $600,000, $5,000 a week on these things, you know. So, you know, be this commodity cycle that we're talking about here, try and use shares, you know, rather than CFDs for this. What else did I want to have a look at? I wanted to have a quick look at the banks. Not much. I'm just going to look at CommBank here. We know CommBank's going to have a dividend on the 5th, is it? I'm not sure. It's the 3rd today. So yeah, we also know that we're in a corrective move, a pattern across the 80 here, and it may be in 3 legs, as I've sort of pointed out. It may be, you know, it can still pull down further here to the 77.45 here. I don't know what the dividend is. Is it $1.50 or something? So we can expect that. The thing with dividends, you know, is that if you're in a bear market and they're going to pay a dividend, it really forces the bear market much lower. So if they were paying $1.50, you could still see it to pay $1.50 and drop it and still run down another $1.50. Do you know what I mean? In a bear market. So in a bull market, when you everybody's in for the dividend, of course. So in a bull market, it will drop its $1.50, but if it's in a weekly trend to the upside, it will drop its $1.50, and then it will continue in that trend. So it's okay to hold while you're in that particular trend. We do see CBA moving higher. So, but we're just looking at some type of correction here. I haven't focused on it a lot, but that dividend's coming for that. So just be a bit mindful of that. Is there anything else that I needed to look at with this? No, I think that's all pretty good. I just want to check on what BHP closed overnight. It should be, oh yeah, it's up. So this is New York BHP, same count, but there we go. There's our confirmation, guys. That's you know, it's clearly moved through the top here now. So that will move up to 65. Yes, it can come back and check on this old high here. You know how it walks up in steps. Here's a nice classic trading levels pattern here. The arrival, the reaction, the first high above the level, the ABC pattern here. And then you can go long above this high and so on and so on. But this has got, you know, this is where we're looking up here, guys. You know, so we're looking at a long-term trend eventuating here. So let's build into it, but we'll just do it from the ASX. I might put this in the. I think I will actually. I think I'll put this into our US trades as well for a longer term trend. Probably, maybe even in the portfolio as well. Alrighty, that's it. Thanks for tuning in. Cheers.